Now it's time to welcome our next guest and my very good friend, Eddie Ghabour, co-owner of Key Advisors Group in Lewis, Delaware. Eddie is a regular on Fox Business and across the financial media. He's also, of course, one of my very good friends and a great friend of the income generation. In addition to that, he's the best-selling author of the book, Common Sense Bull. Eddie, thanks so much for being here with us on the show today.
It's my pleasure. Thank you for having me.
Hey, so as you heard, we're talking today about stock market indices. And of course, you and I being in the business, we tend to look at the S&P 500 more than anything because it's so broad. But what do you tell your clients in terms of what are the benefits of using indices or they're watching indices from time to time versus maybe what are some of the drawbacks?
So one of the toughest things is educating folks on really what they should mirror or compare their portfolio to. As you well know, most people just compare their portfolio to the S&P 500. And for our client base, if we have 100% correlation to the S&P 500, then I should be fired doing what I'm doing for a living because their money's not all in the S&P 500. A properly diversified portfolio, in our opinion, should have weightings in small caps, international, domestic bonds. And if you want to truly measure it, you need to weight that with each one of those indexes. So looking at the S&P is a great gauge of what the overall market is, but it should not be a gauge of what your portfolio should be returning, in our personal opinion.
Yeah, it's funny. I've seen people do that have a 50-50 portfolio between stocks and bonds, but yet they look at it and compare it to the S&P 500, and only half of it, best case, only half of it should be compared to that. So in 30 seconds or less, where do you tell them indices can be beneficial?
You know, where the indices are beneficial, I think, is it gives you a gauge on what corporate America is doing in regards to profitability and what the overall stance is from investors. I mean, to me, that's about the value it brings, because unless you're going to dissect every holding inside that portfolio, which, as you and I know, most people aren't going to do, it's just a good pulse on where we are in the stock market.
Or buying opportunities, you get a major dip, that type of thing too. So, hey, stay with us, please, Eddie. We need to take a quick commercial break, and you stay with us also. We'll be back here with more coming up in just a moment on the income generation. And welcome back. We're talking with our good friend Eddie Ghabour, co-owner of Key Advisors Group in Lewis, Delaware, and also best-selling author of the book, Common Sense Bull. Eddie, thanks so much for sticking around.
Absolutely.
Now, I know because you were on our show just a couple weeks ago talking about the markets, your projections for next year. I know you think the market's a little bit overblown right now, and you have some concerns about it over the next 12 months or so. Do you have clients watch indices for potential buying opportunities? I'm just curious, and I do that in my practice. I say, gosh, if you see the market get below a certain level, you might want to give us a call. It might be an opportunity to get a little more aggressive, assuming, of course, they're at the right stage in their lives where they could take more risk.
Yeah, absolutely. I mean, for many of our clients last year, as the market continued to hit new highs, we raised some cash for clients with the idea that when we did see some type of correction, because you will normally see at least one or two corrections per year, we would try to find a better entry point. Because right now the market has had one heck of a run. It has surpassed all expectations. And it's my personal opinion that we are due for some type of short-term pullback that will be a good opportunity for the person with the right risk tolerance to take advantage of that.
Yeah, and what we've seen over the last couple of weeks is interesting with this irrational exuberance, so to speak, going on in the markets. Just recently, we saw the whole thing going on with Iran and so on. The market seemed to just shrug that off. They just wiped it off their shoulders, and markets are going up again. Did it surprise you how resilient the markets were even just this past week with what's going on geopolitically?
Absolutely. I mean, it's almost like the market right now just doesn't want to go down. It's probably one of the most resilient markets that most people will see in their lifetime. But that's also a warning sign, because bad news should be bad news for the market. And when the fundamentals don't match what the return is, that's a red flag. And so that's another reason why we feel that right now, I think the market's still going to do well this year, but I think right now we are due for some type of pullback, and I hope people are prepared for it.
Yeah, and it might do well, but if it doesn't make fundamental sense, if ultimately it's pure speculation, most of your clients, as most of my clients, don't really want to speculate. They don't want to participate in that. So 45 seconds left in the segment. Tell our income generation members your best words of wisdom for 2020.
For 2020, after a record year last year in regards to what their portfolios have probably done, they need to take some caution and don't get caught up in the exuberance of the market hitting new highs and getting outside of their normal risk tolerance. That's a big, big concern for us. So be defensive heading into 2020 and make sure you're well aware of the risk you're taking in your portfolio.
And most important, don't get greedy.
That's exactly right.
Yeah, good advice. Good advice from the big state of Delaware. Eddie, thanks so much for being on the show. I really appreciate that.
My pleasure. Thank you, David.
All right, you stay with us too. We'll be back here with more coming up in just a moment, right here on the Income Generation.